Hello and welcome to the Accounting Podcast. I'm Blake Oliver,
And I'm David Leary.
and we're joined today by a special guest, Roger Knecht. Hey, Roger.
Pleasure to be here. This is going to be great.
And Blake, I'm actually at the OnPay offices, so I got you some swag. I'm actually in Atlanta at OnPay. It's not the fake OnPay studio. It's the real OnPay studio this week.
Not the virtual OnPay studio, the physical OnPay studio. David is there. Awesome. That's great. Roger, welcome to the show.
Pleasure.
Roger is the president of Universal Accounting Center, a post-secondary school for accounting professionals. And Roger has helped thousands of business owners work on their businesses to increase revenue, improve profits, and build value. You have your own podcast, Roger, Building the Premier Accounting Firm. What's that about?
We basically address various things that business owners of bookkeeping, accounting, and tax firms need to consider as they're running their business, training their staff, finding new clients, and most importantly, retaining and working with their clients.
Awesome. And Universal Accounting, here in your bio, it says post-secondary school for accounting professionals.
Yeah.
What does that mean?
So different than what you might imagine, it's not just a single program or offering that we provide. We're registered with the state of Utah, where our corporate headquarters are, as a post-secondary school. So just as you would expect to go get like a CDL license, your cosmetology license, we work with individuals that have their degrees typically in accounting and bookkeeping. They have their 2-year, 4-year degree, let's say, CPAs, and they're wanting to specialize in small business accounting procedures. So we have a variety of curriculums to help individuals start their businesses, offer those services, train their staff. We work with about a third of the people that are non-accounting professionals by education. So they've had experience in trade and they want to get maybe certified. And so we provide a pathway for that. We work with a lot of CPAs, enrolled agents that want to get into running their own practice. And so we're helping them transition into the small business spectrum and learn marketing, selling techniques, pricing techniques for them to start and build their businesses.
Well, that's great, because I didn't learn any of that in school when I went back for accounting to get my CPA. So it's great. It's great you're out there providing that resource to people. So, David, we got so much to talk about this week in the news. I'm just going to run down my list. I'm eager to hear what you've got. We have Markham getting fined by the SEC. They're going to pay $10 million in fines for widespread failures in their audits. We've got Hunter Biden pleading guilty to misdemeanors that involve failure to pay his taxes. The son of the president didn't pay his taxes. We've got CPA Ontario and CPA Quebec leaving the CPA Canada alliance. So much more than that. What about you, David?
Remember a month ago I talked about the accounting error that gave the war in Ukraine war money? Well, apparently they found some more money.
They
updated there's even more available now. So it went from, they thought they had $3 billion, but maybe it's closer to like $6 billion that's available.
The Pentagon
so now Congress,
billions and billions of dollars.
Sounds like a rounding error.
Yeah, right. Well, they still haven't successfully done an audit of the Pentagon ever. So, I mean, doesn't surprise me.
Well, if I remember right before 9/11 on 9/10, there was I think $1 trillion that were unaccounted for. So there you go.
Yeah, there we go. So, what should we start with? Should we start with this Hunter Biden thing?
I didn't hear anything about this, so I'm fascinated.
All right. Well, okay. So basically, Hunter Biden has been under investigation forever. You've heard about this, David, right? I mean, the whole Hunter Biden investigation for like 5 years that's been going on.
Yeah, the laptops and the money, questionable money. Yeah, I've heard about lots of these things, right. Yes.
So, for our listeners abroad, Hunter Biden is the son of U.S. President Joe Biden, and he is going to plead guilty to 2 federal misdemeanor counts of failing to pay his taxes. The plea agreement with the U.S. Attorney for Delaware includes a provision for probation for Biden, meaning he is unlikely to face jail time. The agreement also includes a gun possession charge that will likely be dismissed if certain conditions are met. This is a decision by a Trump-appointed U.S. attorney, and it indicates an end to the 5-year investigation into Hunter Biden's conduct. The resolution suggests that prosecutors did not find cause to file charges related to Biden's dealings with foreign entities or other wrongdoing. So, 2 misdemeanor counts of failing to pay his taxes, and then 1 on a gun possession charge. And what I didn't mention is the fact that Hunter Biden had a drug problem for years and years and years. And apparently during these years when he had a drug problem, he didn't pay his taxes for 2 years. And I was like thinking about this, and I'm trying to imagine like how that happened, because the guy was making like $1 million a year. So we know he had an accountant, right? Like
I don't know that we know that.
He's not filing his taxes on TurboTax, right? So I hope not. So the question for me is like, who is the CPA doing the taxes, and then was he like trying to call Hunter Biden, and then the guy was like just not responding, and eventually they gave up? Like that. I'm trying to figure out like how does that even happen?
So can you clarify me? Is this just like, oh, he didn't file taxes because he just was busy? Like he had very valid W-2s and proof of income, or is this like we don't know where his income came from and that's why he didn't file taxes?
It's unclear. It's unclear. Okay. I was curious about the charge because, of course, the complaint from the folks on the right is that Hunter Biden's getting he's getting off easy for this, right? He's not going to jail. He's not going to serve jail time. He's just pleading guilty. It's misdemeanors. And so I looked up, what exactly he's pleading to, which is the failure to pay. And failure to pay your taxes, that often gets a lot of people in trouble and gets them jail time. I mean, it's the classic, mobster way to get mobsters in jail, right? You don't actually get them for the crimes that they committed with, alcohol or drugs. It's with failing to pay your taxes, right? Who is the famous guy? Al Capone.
Al Capone,
right?
racketeering.
Yeah, right. So I looked up, and I was curious, like when is this a felony versus a misdemeanor? I didn't really get a good answer. It seems like apparently failing to pay or failing to file your taxes can be a felony if they want to make it a felony, and it can be a misdemeanor if the prosecutor wants to make it a misdemeanor. So that's all I know. That's the best I can do with that. So there you have it.
Well, what I'd bring to the conversation is I'd be curious what any of the tax resolution specialists that may be listening would want to contribute here, because on a regular basis, they're representing their clientele before the IRS to try and get such resolutions. And I would be just curious, is this a abnormal, not traditional favorable thing that Hunter's getting out of this situation? Or is this a typical resolution that someone could expect if they likewise didn't pay their taxes for 2 years? I know there's devils in the details, but at the same time, I'd just be curious what some of our tax resolution specialists might think of the whole situation.
Yeah, I'd be curious as well. I did read that it's very uncommon for this to be prosecuted as a felony. There's only a few hundred of those cases in the whole country every year where it's prosecuted as a felony. So I think it sounds like if you come clean and you make a deal, you're going to get the misdemeanor, and you pay your past due taxes, and you pay your fines and your penalties and all that.
Yeah.
So,
I think NFL linebacker Bill Romanowski was like, I think he used to be for the Raiders, and he moved over to the Denver Broncos, and he apparently this broke this week that the government's suing him for $15.3 million in back taxes. Apparently, he had a nutrition company, and they just like used that bank account to like pay for their kids' apartments and just use this money for years and years and years, and obviously didn't pay income on it. But there's nothing in this news article, even though the Department of Justice is going after them, that there's going to be criminal charges, right? They're just going after them for the money, right? And so you're right, like there may not, here's another case where it doesn't seem like they're putting anybody in jail over it.
Yeah, I think the key is don't go to trial.
Yeah.
Right.
Resolution.
Right. You go to trial and you lose, then you're going to jail. That's what tends to happen. Well, since we're on the government beat, David, let's talk about this accounting mistake that caused the Pentagon to overestimate the cost of weapons sent to Ukraine by $6.2 billion. So now we get to send more without having to do another authorization through Congress. So
because I guess it's just the book value of those jets, right? Like, those jets aren't really $40 million; they're only worth $16 million or 20.
Well,
so
and it's not jets, right? Because I think that's the one thing we've refused to send them yet. Is we're sending rockets and drones and all that stuff, and bombs, or whatever. But we're not sending munitions. But we're not sending jets.
Yeah, javelins and so forth. Yeah.
But so this is fascinating, right? The accounting explanation for this, I think the public generally misses, is the Pentagon, when they came up with the number. So we're not shipping new equipment to Ukraine. We're giving them the old stuff. And this is what we always do when we supply other countries, right? We give them our old inventory, and they make use of it. And then we get to go buy new inventory from all our defense contractors who are really happy because now we're placing a bunch of orders, right?
Yeah,
It's
that's referred to as the military industrial complex if you want to get down and dirty.
Yeah.
So there you go.
So apparently what happened is that the Pentagon, in tallying up the value of everything we've been shipping over to Ukraine from our inventory, used replacement cost instead of net book value. And so when they adjusted for net book value because of depreciation,
That's where I was going to go.
they realized that they overestimated the cost of the equipment. So now we can send more equipment.
And they
Yeah,
did
so-
2 years in a row. So it was 2.6 billion for fiscal year 22, 3.6 billion for fiscal year 23, and that's how you get your 6.2 billion. And they said it's great because this is going to mitigate the need for Congress to pass additional legislation to spend more money.
But like thinking about this, it doesn't really make sense, right? Because we're going to end up paying the replacement costs of all this equipment. So,
They can dip into the IRS budget now on that. Remember, if you're short, you can dip into the IRS part of the debt ceiling agreement now.
I guess so.
This is just a game. It's a game, and you're right. Us in the accounting world are like, yeah, this is a game. But for most people, like, they're not going to understand this, and this is a scam at some level.
It's a shell game.
They're playing games with these numbers. They're playing games.
It's an accounting trick.
Yeah.
Right. That's what it is. And I wonder, like in the law or in this, like under the authorization that the Pentagon has to send equipment to Ukraine, does it define what accounting to use? Does it say you have to use replacement cost or book value, or is it just vague and they can do whatever they want? And if so, that's kind of clever what they're doing, I suppose, from an accounting standpoint. All right.
And it's still confusing how they figure out the valuation, because is there an aftermarket to resell this into? Like, none of it makes any sense. Like, why don't they just value it at $1? And be like, hey, look, we have hundreds of billions of left.
Right. So Roger, I got a question for you.
Yeah.
Who do you think would win in a cage match, Elon Musk or Mark Zuckerberg?
I've seen this, and I saw something that said, "No, this is legit."
Well, it made the Wall Street Journal, so.
So, if I remember correct, Zuckerberg is like into jujitsu.
Yes.
So, and I understand he's good at jujitsu, and Joe Rogan is big into jujitsu. So I'm going to assume that there's some favorability there. I don't know if Musk has any formal training, so I don't wager, but I'm gonna lean towards Zuckerberg. So there you go.
Yeah, I think I got to go with you on Zuckerberg. Musk is notoriously unathletic.
But
And
didn't he have to get in street fights as a teenager, though, he said? Or is this just made up?
I in South Africa at the emerald mines his father owned or something. I don't know, but I just love this picture, by the way, on the screen. The Wall Street Journal article has it's Zuckerberg's head and Musk's head on the Rock'em Sock'em Robot game, and they're like punching each other in the face.
So I've got to ask: do you think one of them just needs money and they want a pay-per-view event?
I mean, do they? It's hard to say. I don't think either of them really need money.
I'm
right
kidding
now.
on that. I'm just pay-per-view. You hear about these pay-per-view events that are millions of dollars for people to have access to the actual viewing rights, and they turn into big events when you get those, the boxing matches and so forth. So
they could stream them on their
own platforms,
respective social media platforms.
There you go.
So I was thinking about this and like, well, what about like in our own industry? Like, obviously, Brad Smith, he's left Intuit, he's retired. You have Rod Drury, he's retired from zero basically. But think about like those types of fights. Should we have had these CEO battles in our own industry? Now, I think Brad Smith would have taken Rod Drury down because he's a black belt. His guns are monstrous. Like, he probably would have. But I just make sure, like, are there other battles that are brewing here? We could have CEO fights of different tech companies that we love in our space.
Well, you do know there's precedents. There's that YouTuber that went boxing.
Yeah.
I'm trying to remember his name right now.
This is
into it.
This is everything that's bad about social media, right? There's a lot of good there's a lot of good about social media, but this is the worst of it. And I can't believe that Zuckerberg and Musk got into this, like challenging each other to a fight. I mean, how childish can you be? And that's billionaires.
I'm waiting for our email next week where some accounting podcaster is challenging Blake to a fight.
That's how we're going to settle things nowadays.
And Mark,
Paul Logan. There it is. I see it. Paul Logan.
Thank you, Mark, who has joined us for the live stream.
Jake Logan.
Jake
yep.
/ Logan Paul,
Paul Logan.
probably.
Paul Logan, yeah.
It was.
Oh, wait, we already know the battle. Here's the fight. You have
Wait, is it
CPA
Jake
Canada
Paul or Logan
fight.
Paul?
I thought it's Paul Logan, but I could be wrong. I'm just going from memory. Somebody in that feed there's got it right.
One of those names. Yes, thank you, Mark. Thanks, David and Trinity and Heather and Randy for joining us. Randy says, Roger has the best voice in podcasting.
Right, Randy.
Which is amazing because he's just using like earbuds. It still sounds amazing. Yeah.
No, I think you've got a real mic, right?
Oh, yeah. We're
just off
here.
screen. Oh, perfect.
Yeah, Roger's got the mic.
Just off screen. Yeah, professional here.
Um,
We do have a fight going on, though, in our industry. You kind of led it a little bit here. You said the CPA Canada versus Ontario and Quebec.
So, yeah, Ryan
Explain this
Lazanis sent this over, and I want to read his message here. He said, CPA Ontario / CPA Quebec are terminating their relationship with CPA Canada. I think I'm happy about this. Here's why, plus my interpretation. The profession is in trouble right now. Fewer and fewer want to become CPAs. The numbers speak for themselves. We are also less competitive than ever. My feeling is that CPA Quebec and Ontario are concerned about the direction of the profession and are going to take matters into their own hands. CPA Quebec and Ontario both said the same thing in their communications. They need to better support their members as the world evolves. They need a professional body that is innovative, efficient, streamlined, responsive, and nimble in order to attract talent and better prepare them for the future. So I wonder if we might see this. Well, I guess we don't really have this in the United States because everything's all state by state anyway, right? State societies, state boards of accountancy. But I guess we could see maybe some state boards of accountancy severing more of their ties with the National Association of State Boards of Accountancy and doing their own thing. And I mean, we've seen that with Minnesota moving to replace or provide an alternative to the 150-hour requirement with 120 plus 2 years of experience. Going back to that model, they're going to, that bill is in the legislature. They might actually do it. And that would be something kind of akin to this.
Yeah. And isn't Quebec historically like the Texas of Canada? Like they want to secede, like it's the French Canadian part, right? I think in general, they're a little bit more the rebel rousers. They don't want to be part of the bigger picture. And so is it some of that, just their nature of rebelling against this? But you're right, though. I think this is a bigger trend of possible indications what could happen in other places, because I think the talent crisis and the leadership in a lot of these feels broken. And everybody's doing desperate acts. And then did you see the response from CPA Canada?
No.
So this is an article, it was actually picked up in Yahoo Finance. So it's just, it's obviously just a press release. And it says CPA Canada is disappointed and surprised that CPA Ontario and CPA Quebec have decided to sever ties with the national organization, triggering an 18-month withdrawal period in accordance with the terms of the current collaborative agreement. And then they also have another paragraph that was in there that says, we strongly recommend that CPA Ontario and CPA Quebec re-engage with CPA Canada, including all provincial, territorial, and Bermudian bodies, and work with a world-class conciliator to guide future deliberations. Like they almost like are like they're just communicating through the press. So obviously the communications are that broken where they're doing the press release things, which is really similar to what the AICPA did with Minnesota, Blake. They were doing public letters back and forth.
Right. We'll see what happens. Keep us posted if you're in Canada.
Is there any
and you're
Canadians
listening.
in the chat right now that can fill us in?
Let's see. Sauceboss18 says, nice. A story from Canada. I'm originally from Quebec, actually, but got my CPA license here in the U.S. David is right. Quebec always wants to go its own way and be different than Canada. You're right, David. Yeah. All right, shall we talk about Markham? More fun news from the big firms. The Securities and Exchange Commission and its audit watchdog, the Public Company Accounting Oversight Board, have charged accounting firm Markham with systemic quality control failures and violations of auditing standards related to its work for hundreds of special purpose acquisition companies, also known as SPACs, and other clients. Markham, based in New York, has agreed to pay a total of $13 million, $10 million to the SEC and $3 million to the PCAOB to settle these investigations without admitting or denying the allegations. The firm has been accused of prioritizing revenue over audit quality, especially during the SPAC boom, neglecting standards around audit documentation, risk assessments, audit committee communications, and engagement partner supervision. And as a consequence of the investigation, Markham has been mandated to make structural changes which have never been mandated before by the SEC or PCAOB. They have to put in place a chief quality officer role and an audit committee to oversee its quality control system. So Markham took on hundreds and hundreds of these SPAC audits and did not increase the number of audit partners, and quality just dropped.
Yeah.
They prioritized revenue over quality. And I got to say, I'm not surprised that this happened, because that's the whole system. The business model of public accounting firms that do audits is designed to prioritize revenue. Top line revenue is what everyone talks about all the time. And quality only matters to the extent that you avoid getting in trouble with regulators. Now, they went way, way, way over the line, apparently, like adding hundreds and hundreds of audits and not upping their staffing appropriately. But this is not unexpected.
So was there any indication as to how long this had been going on? Is it a systemic thing that's been happening for 5 years, 10 years, 2 years, 1 year?
So this happened in 2020 and 2021.
Okay, 2 years.
When the SPAC rage occurred, when it became super hot to do SPACs. Yeah. So the market saw more than 860 SPACs complete IPOs from 2020 through 2021, and Markham audited nearly half of them.
Oh.
And I think it's because the Big Four weren't touching these SPACs, because historically SPACs have been something that have been a little bit.
The Big Four had their own audit quality issues they were dealing with a bunch of other companies. Never mind the SPACs; they didn't need to help out with us. So, Blake, what was the total fine then?
$13 million.
So $13 million, and they were forced to create a new position or whatever, right?
Yeah.
So it's very clear. I heard a podcast on Bloomberg's Talking Tax, and they're really talking about KPMG's troubles right now, because they basically had the bank failures audits, right, for Silicon Valley Bank and
they audited all the banks that failed.
The other one, right?
Yep.
Blanking out, First Republic, and the other one. The First Republic did not go under. It was Signature and Silicon Valley.
Silicon Valley.
Yeah, those are the two that went under. And they're talking about a little bit of I guess in my brain as I was listening to this is how big of a penalty does it have to be? Because essentially we're having the same problems they had with Anderson when they broke up Anderson.
Yeah.
20 years ago. So it's 20 years later, and the same things are still happening. And how big of a penalty is it going to take? What's $13 million? That's not going to accomplish anything. You have to add a position. I mean, they destroyed a whole entire firm and it never improved it. So
yeah,
what's the hope?
So you make a good point, David. Markham U.S. annual revenue is $800 million. Okay, $800 million in 2021. The fine is $13 million. So, I mean, it's not immaterial, and probably in this, if we took the revenue that's just for audit, that's a big amount, right? Maybe it's their whole profit for that time period, but still, it's not. I don't know. I don't know if it's a big enough fine, but I also don't know if fines are even the solution when it's the business model that encourages this kind of risk-taking behavior. Roger, you were shaking your head there.
Well, I think there's two things to consider. First of all, the fine is meant to obviously penalize the entity that's done the egregious thing. So there's that slap on the hand, and it's intended to actually curb future intentions of doing it. It should be enough to say, wow, that was significant. I don't want that to happen again. And then them change the routine. But it's also a message to everyone else around watching to see, is this worth being worried about? Should I be concerned? And am I going to change my business model because of what I saw happen over here? And the question that I think you're asking is, was the messaging of the $13 million fine significant to get everyone else's attention to say, we internally need to address this within our own organizations? And that's where I don't know if the 13 million is accomplishing that. Is it too insignificant of a fine? Not for the entity that's being fined. It's the messaging to the profession.
Well, and were any partners held accountable
Individually? Yeah.
Yeah. If you don't hold individuals accountable and fine individuals, and like what do I fear as a partner at a different audit firm? Like, okay, my firm might end up paying a fine, but if I don't pay the fine, I'll just keep doing what I'm doing.
Well, who just got fined for the exam cheating last week? Which of the big four was that?
I think it was KPMG in Australia that was cheating on the ethics exams.
And then it was like a $60 million fine or something. But my understanding is 2 years before, it was one of the other ones. It might have been UI. They got fined like 30 million because there was some sharing of answers for some of the exams, right? And so now they've doubled it. Like, going back to Roger's thing, like, it obviously doesn't deter how other people are going to do business. Right? Like, nobody's getting like, hey, let's make sure our ducks are in order because we don't want to get the next fine. It doesn't seem a $30 million fine was enough to wake up somebody else about this.
Well,
I don't know.
So continuing on with the unethical behavior at large firms, PwC in Australia got in big trouble for sharing confidential government plans with their private clients about tax avoidance schemes. So the government was consulting with PwC in Australia. The Australian government was consulting with PwC Australia on ways to reduce tax avoidance by multinational corporations. The partners at PwC then turned around, took that information, and gave it to their corporate clients to help them avoid taxes. And this all came out, and now it's been all over the news. PwC's in big trouble. They're under investigation in Australia. And public opinion has not gone well for PwC there. A poll by the Australia Institute found that 80% of Australians want PwC banned from receiving any further government work due to the tax leak scandal. The survey found that 45% of respondents believed that the ban should be permanent, while the remainder believed it should be for a period of between 2 and 10 years. The survey also found that a permanent ban was the most popular response across all voting intentions. So despite political party affiliation, people really don't like this.
Well, just to be conversational, I'd be curious on a personal note, the information that was actually shared with their clients, were these loopholes that were legal, that were established by government for them to take advantage of, and they were just passing along the loopholes that existed and were meant to be taken advantage of anyway? Or were they sharing information that was, something different? I'm just curious about that.
So my understanding is that PwC was consulting with the government on proposed changes to legislation, and that was supposed to be confidential, and they gave that information to their clients.
Yeah,
so
they're double dipping. They're double dipping. They're consulting the government, getting paid by the government, and helping them close some tax holes. In the meantime, because they have such deep awareness of them, they're double dipping and charging their clients to avoid those. And this is the same thing I think we talked about in Canada with the all the audits of the forest and the forest protection. It turns out like they're issuing these reports on deforestation. KPMG was, but they're getting money from the government over here on this hand, but they're also in some committee creating the rules, and they're also auditing the actual foresting companies, right? Like they're just double and triple dipping, and it's all conflicts. It's all conflicts.
That's the right word for it too, by the way, is conflict.
All right, so pivoting
Definitely
away.
not fiduciary.
Do you want to stay in the big firms because there's news about BDO, CLA? Like, I don't know.
I was thinking we could save that unless it's burning, David, because we've talked enough about the big firms. Let's talk about the small ones, because I think most of our listeners are small firm owners. They work in small firms. That's what,
They start the drama. It sounds exciting. Small firms need to create some $30 million fines.
So I saw this article on Yahoo Finance. I'm a small business owner. How much will a CPA cost me? And David, you and I have been talking on the show about how we tested out TurboTax full service business, and we finished that experiment, and it cost us $1,500 to file our LLC tax return with TurboTax business. So I saw this headline and I thought, oh, that's interesting. I wonder if what we paid is in the range, what we should have paid. Was it too high? Was it low? In my conversations with some CPAs and enrolled agents, tax preparers, some have said it's low, some have said it's high. So it seems like there's a wide range. So anyway, quoted in this article is accounting firm D. Mercurio Advisors. They said a small business owner should expect to pay between $1,000 and $1,500 on average to have a CPA firm prepare both their individual and business tax returns. So, David, according to this firm, quoted in Yahoo Finance, we overpaid because we paid $1,500 for just a business return.
Well, I've been overpaying a lot the last 3 years.
Roger, you teach about pricing, right? In your
I do.
school? Okay. So, what's your reaction to this? Is that reasonable? Between $1,000 and $1,500 on average to have a CPA firm prepare both your individual and business tax returns?
Short answer is yes, based on the people that I speak with. The one thing I will kind of temper that with is this. It does change based on that being a national average where you're at. Metropolitan areas, you're definitely going to be charging a different amount. So the regional or the metropolitan variable there does play into it. If you're actually dealing with specialty services, that'll add to that as well. So I think that's like an average. I think it's a safe number to be throwing around, but it wouldn't surprise me at all if somebody added on another $500 to maybe $1,000 more to put into that $2,500 range. So that at a face value, that's totally fine.
Mm-hmm.
At least it's starting at 1,000, and the article didn't say like, $250.
Oh,
And everybody
no.
price sets off of that. I saw this article. You should be charging me $250.
Yeah.
So
Honestly, the
it's
$1,000's a
high.
little less than what I would have expected. I would have expected something like $1,200 to $1,500 as the lowest. So the
Yeah.
$1,000's a little bit on the lower end, but when you consider that there's definitely places in rural areas where you do see traditionally these numbers just a little bit less than average, it stands to reason. So depending on your listenership, you could find that somebody up in Montana, somebody in North Dakota, they're going to say, oh yeah, that's perfectly fine. But then you talk to somebody in San Francisco and they're going to be like, are you kidding me? This is a $2,500, $3,000 thing. So
Yeah.
that's what I experience.
Yeah, it's highly local. And it depends on, if you're in a major metro, if you're in a rural area, it's impossible to generalize across the whole country. The U.S. is a big place.
Yeah, it is.
And just like housing costs vary dramatically, like there's places where you can, rent a whole house for, under $1,000 a month. And then there's places where that's going to cost you 5 to 10 times as much, right?
Yeah. So you basically start with a national average, and then with that, you start to put in some regional components such as metropolitan specialization. So the industry components, whether or not there's anything unique going on with the service. But as a starting point, that's a national average.
Yeah. So if you look at what Intuit is doing with TurboTax full service, the business returns are $1,500 flat fee. David, do you know what TurboTax full service individual is?
No clue.
TurboTax Live full service. Let's just take a look at the personal price. It says start for free, pay only when you file. Of course, they always say start for free.
Probably coming in at $350, $400, I bet.
Okay, so full service is $219 to $409.
There you go. Yeah.
State additional. So let's just say it's like $300 to $500.
Mm-hmm.
So basically $1,800 to $1,000 to $2,000 if you did TurboTax full service for both individual and your business return. So, Roger, I mean, should everybody be raising their prices so that's our minimum?
Well, here's where I was going to go. The conversation that I'm sure most of you are having is too many people are pricing themselves too low and not really considering how much their services are worth. And so it's not uncommon for me to have conversations with firms where the first thing that we're addressing is that their pricing hasn't been changing. It needs to be increased. They're not valuing their services correctly. And so I would say more than the average is typically a pricing issue. So if the average is 1,500, that's great. But you're saying that you paid that for just the filing for the business, and they're incorporating the business and the individual. So it's just proof and case for the fact that the people are today in the industry just undervaluing their services and not charging enough. So maybe a 10, 20% increase would be a warranted thing.
And
Absolutely.
I think back to when TurboTax Live launched and QuickBooks Live launched, and like, oh, they're going to undercut me and take all my clients and all this. But one of the first moves into it really made was they changed the prices immediately, because I think they realized, like, we can't do this for $99. And they just, so you're right. Now, maybe the market price of what Intuit has is probably pretty close. So if you're below that, you have some room to move up.
Yeah.
Because it's very easy to, well, you could go to TurboTax. They cost this much. I'm only like $100 more. You have room to move your prices up right now.
And if I could give Intuit credit, I would basically say they're helping the market, because it's causing everyone else that's skittish to raise their prices to basically do so, because they can see that the market can demand and expect that. So all of a sudden, these people that are squeamish about whether or not they ought to be charging their clients more, they're realizing their clients are paying this. The businesses around the corner are going to Intuit and paying this amount. So it does give them that confidence to perhaps go out there and do that, or just price themselves a little bit below and say, for $1,500, I'll do your individual and your business, and be that competitive person in the local market. All choice.
And if anyone complains, you just say, hey, you can go have Intuit, TurboTax do it for more, right?
Yep.
That's a great argument.
And a very impersonal experience.
Yeah.
Yeah. So that's where I'd go.
So I've got a story about online gambling. David, Roger, do either of you
in the Bahamas?
Well, you don't have to do it in the Bahamas anymore, because it's all legal here, right? Like I feel like
if you have a cell phone, you can gamble, basically. Yeah.
Yeah. So, we've got major league sports going to Las Vegas, which used to be totally untouchable because of the stigma against sports gambling, and now we're all like into it. We're all on our phones. We're all gambling on every game. I haven't tried it yet. Maybe it would get me more into watching sports.
I'm not mature enough to install a gambling app to my phone, so I know my personality enough. Like, I won't do cocaine. I won't put a gambling app on my phone. There's two things I just know my personality might like too much, so I'm not going to do those things.
Well, isn't the gateway drug to all this the fantasy football type thing?
I guess so. I never got into that too, because it was like too much work. I don't need another full-time job during football season.
So do either of you do the brackets?
For $20 to make, yeah.
Do either of you do the brackets though?
I'll do a March Madness bracket, because that's easy, right? You just fill it out, you're done.
You pick them by the colors of their jerseys, right?
Yeah.
Or randomly. So
here's the story here.
So the story here is, I saw this in the Wall Street Journal. Online sports bettors lose more as parlays gain popularity. So parlay bets are these bets where you have to win the bet, you have to satisfy multiple conditions. Like, my team is going to score X points, and this receiver is going to score this many touchdowns, and something else happens. And you combine all these smaller bets into a bigger bet, and if all of these things happen during the game, then you win some amazing amount of money. And it could be, like, I put in $50 and I could win thousands and thousands of dollars, because it's unlikely that all those things will happen. But it's a way to, bet with a small amount of money and have a potentially big outcome. Right? With the same psychological reason people like playing the lottery.
Yeah.
Spend $1, you could win $1 billion, kind of thing. And parlay bets have increased in popularity with bettors, and they've been pushed by these online gambling sites, so that it's one of the top things that you see. They're promoting these parlay bets a lot. And I dug into this article, and I wanted to know why. What the Wall Street Journal wanted to know, why is parlay betting getting pushed so hard? And it's because the house makes way more money on parlay bets than they do on regular bets, like just who's going to win, or
it's the margin,
a point spread.
Yep.
And there's a lesson in here for accountants. But first, let me tell you the difference, because it is a lot. So on a typical straight bet involving single contest, the house's hold rate, meaning their margin, is about 5%. So they keep about 5% of all the money that's bet, and that's their take, right? And the rest goes out back to the bettors.
Because their goal is to keep, if for straight bets, a little balance. They want to be perfectly in the middle, perfect equal amount of bets on both sides, and they just take their 5% vig, and that's it, right?
Yeah, which, like, if you think about it, hey, that's pretty reasonable for the house to take, given the service they're providing as the bookie. Hold rates on parlay bets, on the other hand, offer the house 15 to 25%.
Wow.
Right, 3 to 5 times the margin. And why is this? Well, it's because bettors can't easily compare parlay bets across betting sites. Right? Because every parlay bet is unique. So I can't go to one website and see, the payout is this and the payout is this. I can't compare. It's apples to oranges. It's not apples to apples.
Yeah, you can't compare the spreads on each of the bets.
Right. And so that's why all these sites are pushing parlay bets. And so from a sales and marketing perspective of running an accounting firm, or let's say, you're in corporate and you're helping your company come up with pricing strategies, this is what you want to do. If you want to have a bigger margin on your services, you don't want to be easily compared to the guy down the street or the other service provider in your area. So you want to create bets or services or prices that are not comparable. And so if you're pricing your tax return, like if you're selling a tax return for a price, like a business tax return, and everybody else is selling a business tax return, I can easily price shop.
Mm-hmm.
So the question is, how do we change the way we price so that it's not easy to compare? And subscription pricing is a great way to do that. And so if I'm selling you a subscription to bookkeeping and tax services that costs X dollars per month or quarter or week or whatever it is, you can't compare that to the price somebody's charging for a tax return.
Or even just bundling, even though you're bundling price, like somebody could try to do the math of the 2 or 3 separate, but even that's hard, right? Like,
right.
If you just do one bundled price.
That's a better way to say it, David, because that's what a parlay bet is. It's a bundling of multiple bets. Yeah. So when you bundle, you make it harder to compare. Roger, I'd be curious to know what you think of that and like what you teach in terms of pricing strategy.
Yeah, very familiar with it. In fact, subscription is something Ron Baker's been pushing here recently. So the way I basically simplify this entire discussion is there's 5 pricing strategies, and there's more popular ones within this, but it's hourly, flat rate, menu pricing, revenue pricing, and value pricing. Value pricing is that enigma one that a lot of people just have a lot of fun with. But when you go to the menu pricing, menu is by default that bundle pricing that you're talking about. And that's where Ron is also going into that subscription base, because you're saying, pay this fee over a period of time and you'll acquire all these services. And so I'm quite a fan of it. In fact, I would dare say I encourage most of my clients to work with 2 pricing strategies. Typically it's the hourly, and generally it's the menu pricing, because that bundle component, you can really kind of create these nice packages that the client is able to kind of determine, okay, what do I really need? And then using Ron's philosophy with a subscription, you can then take that client and have them just pay over time. So just an example, that $1,500 tax return that you paid for your firm, what we'd want to do is amortize that and just basically take in over the course of months, just have them pay, say, $100, $150 a month over the course of the year, such that when it came tax time, I didn't have to collect $1,500 from you. And in that transaction, I've already secured you as a client. You're not going to go anywhere else because you've been paying me. You don't want to leave that on the table. And at the same time, it gives me an ability to kind of nurture you. So all of a sudden, I'm getting a lot of these best components. I've got the subscription, so I've got the recurring revenue, I've got the client retention, I've got the bundling. So there's a lot of great features that come into play there.
Yeah. So you take the $1,500, break it up into 12 payments, say $125 a month, but then you could layer on the bookkeeping, the advisory. Maybe you increase that $125 a month to $200.
You can also bring into it the tax planning component. So not just the preparation of the return at tax time, but the planning that I'll be meeting with you in the second, third, and fourth quarters to come up with a strategy, see if we can implement the strategy, see at the end of the year if there's any implementations that we need to do before year end. And that tax planning, I've built into that monthly fee as well. So now I'm not doing, say, $125, I'm doing $200 a month. And that's reasonable for $200 a month, $250, $500 a month. I'm getting tax planning and preparation. Okay, we're making sense here.
Yeah, if you roll in apps like, and I'll cover your QuickBooks subscription, your other subscriptions, and that makes it even harder to figure out the total. I know we've talked about this before, and it was just on my mind this morning. But Mr. Car Wash is based out of Tucson, and I think they're doing $700 million in like car wash subscriptions, right? Like, so if Car Wash can do a subscription model, everybody should be able to do this. But I just pulled up here in Atlanta, and there's a Mr. Car Wash, right? Built out. I'm like, it's okay, that's based out of Tucson. But going back to what you said about this bundling or not being able to compare prices, you drive around your car, you'll see occasionally the $9.99 car wash out there, or even gas stations. All the gas prices are on the curb, but most of the car washes, the ones that make a lot of money, don't have prices. You pull in, and then it's this confusing menu. It's all bundled. Do you want this? It's all bundling, and you're like, I guess I'll take that package, even though I'm pretty sure the $27 package and the $12.99 are the same. It just looks different on the menu. But it's that same thing. That bundling, you can't compare prices if they don't put the price out there and it's bundled.
Yeah. I can never figure out like the sealer, the wax, all the stuff that they spray onto your car. Like, does that do anything? I should probably look it up. But
it looks pretty though. It's a nice colorful thing coming down on your car while you're driving through.
I'm just the sucker who ends up signing up for whatever they highlight as the most popular package. That's me. I'm like, okay, decision fatigue.
It's called groupthink. You're just trusting the masses.
Exactly. Well, David, you got anything else?
Do you want to talk AI?
Yeah, sure. Let's talk about AI.
A lot, and specifically accounting. So this is a story, this firm out of Australia. There's the headline of the article. New bookkeeping platform, Thriday. Think Friday, but starting with the word Thursday. All right, it's Thriday. Says AI is on its way to save you from taxes and accountants. So I know, Blake, you have a presentation that how AI is going to save accounting. Now somebody's saying AI is going to save people from accountants.
From accountants. Oh, what are we doing that needs? What do people need to be saved from?
Well, it's going to help. The AI is going to, automate banking, accounting, and tax, and eliminate time wasted on financial admin costs. That's kind of what their play is. But then, Digits this week announced that they have some AI play where they're going to have like a chat tool, a generative chat tool, but because they have the math data, now it's going to be math data, and they're making a claim that, and I'll read this directly from the press release, this allows Digits AI to understand the user's intent and request computations without knowing the data's underlying schema or encryption keys while delivering 100% accurate responses to every request. They're making that claim. And then, I don't know, I actually put the link to the tweet. There's another product that just launched called Puzzle.ai. And this is autonomous accounting. You can, you as a startup won't have to spend money on an accountant. It's going to save you time. I feel like it's right back to these over claims we're seeing.
Yeah.
Right. It's just, I don't know. And then I also feel like a lot of these things are just you're just connecting to a bank feeds and pulling on data. Which is what QuickBooks and Xero have been doing for a decade. To me, it's nothing. There's nothing mind blowing about this, but they're definitely getting all the press right now for this.
Well, I think the problem with these tools is, sure, they might be able to automate coding of transactions, like you said, from the bank feed, ingesting those credit card transactions, bank transactions. But without more context, the insights they can deliver are pretty useless. A great example is marketing spend. Oh, your marketing spend increased 40% from last month to this month. Okay, great, but that's useless information without context. Why did it increase? What did we do? What did we spend the money on? And the bank feed's not going to tell you that. I mean, it might tell you that you spent it on Google ads or Facebook ads, but it's not going to tell you what campaigns you ran.
And I still subscribe to your belief that startup accounting is easy. You have payroll and you have some expenses on a credit card, you don't have any income. Like pretty much like this is,
Yeah.
it's super easy to automate that kind of accounting through bank feeds. It's super easy. You have the same spend every month on a credit card for Amazon Web Services and Facebook ads. And it's very easy to do this, but I don't think anything real. I don't want to say real. I'm not knocking any startups that are not real businesses, but I'm just saying like real companies have
Well,
complicated stuff that this
No,
can't
I think
handle.
what you're saying is fair, David, is that most startups are just looking at burn. That's the number every month that they look at is how much are we spending, and a lot of, I think there's like 5 major categories that SaaS spend can be condensed into, and so you just aggregate all the transactions into those 5 expense categories, and you report that to your board, and that's all they care about. And then all the other stuff is non-financial metrics, right? The SaaS metrics on like cost to acquire a customer and all that. But like these platforms can't deliver that information. I don't know. It's just, it looks cool. And then you go in and you actually start asking questions and you realize like, okay, what's the use of this? What's the utility of this? There's not much.
I'm going to jump in on this, and I'm going to
Yeah.
be kind of bold. If you will remember, and I'm going to date myself with this, I believe QuickBooks had a campaign early on that said if you could write checks, you could do your own books.
Yeah.
And it was helping people transition from Quicken over to QuickBooks. And it was simply saying to the business owner, look, if you can write a check, you can do your own books. And initially, I think the accounting profession was like on their toes, or should we be scared of this whole thing? In the end, it became a blessing to the accounting profession because the business owner gets in, starts using the platform, and soon realizes after 3 to 6 months, they've messed up their books. This doesn't make sense. I don't want to do this. And all of a sudden, you had people leaving QuickBooks, coming out to the accounting profession saying, can you go clean up my books? Can you figure this out? And will you just take care of it for me? And I presume that a lot of these things that are just trying to play the magic AI card are going to fall into the same situations. You'll have startups, you'll have people that are expense sensitive that will actually go ahead and try out the thing because they're early adopters and they just want the sexy little AI thing, but they're going to eventually need, as a business, great accounting advice and insights. And that's where they're going to have to turn to the accounting professional and get that perspective, because we're not going anywhere. I refer to it, and I jokingly say this all the time, we're the second oldest profession. We're not going anywhere. We're going to be around for a long time. We are relevant in business. And the AI thing, if you embrace it, can be a tool that we can utilize as a profession to actually simplify and help us become more efficient. But it's not going to change the relationships that we have with our clients in the sense of necessity. They need us.
And somebody tweeted that because if you think back, things are going very fast, but let's go to the previous generation of these AI plays, right? Let's go to Scale Factor, Bench, and Pilot.
Okay.
From a whole 2.5, 3 years ago. Like if we're going back in accounting history here, and those like Scale Factor realized they couldn't do it because they
couldn't scale.
You can't scale the humans. And Pilot and Bench have really started adding a lot more humans to this process. Like you have to have the humans and the relationship and the people. And somebody said at the end of the day, when somebody has to make a really important business decision or they're facing bankruptcy or whatever it is, they want to talk to a human. They do not want to talk to an AI type thing. And so long term, can these businesses scale? Like they probably get excited. They're going to get lots of investment. They have all the buzzwords, right? Oh, look, 160 other founders invested in our company, right? Like they got all the buzzwords, but at the end, like they're going to discover, just like everybody else, you have to have humans in this,
So I'm going to simplify this, and I'm sure both of you have some great comments on this. I really feel that this breaks down into 3 areas, and this is how I feel it relates to the accounting profession. The first thing is there are those who want to go into the interfaces, the ChatGPTs, the Bards. They want to go in and actually write the prompts and may become great prompt writers. And the results that the AI provides is contingent upon how well the prompts are written. So if you're a great prompt writer, yeah, you can get some excellent insights. But business owners don't want to become prompt writers. And so that's where I think we need to go to the next level, which is all these different tech support things that we have within the accounting wheelhouse, all the tech stack services. All of them are going to integrate into their platforms AI for us. You're going to go to HubDoc or HubSpot. You're going to go to Finance or I can't remember the name of it right now. The point is they're going to integrate these things into the platform so that as accounting professionals, we're able to actually, through what we're already using today, access this powerful tool. And that's going to be wonderful because they're providing for us this interface so that we don't have to become expert prompt writers, but yet we're leveraging the AI experience. But here's where it's going to be really, I think, the deal breaker for the business owner. What they're looking for is they're going to ask the question, therefore what? I'm a business owner getting this great insight from the accounting software. The AI is telling me I need to do certain things in the business because I asked a certain question or it just volunteered a certain bit of information. But how do I implement this, or who's going to hold me accountable to make sure I follow through and do this? And that's where I think it comes to that real life person, the accounting professional, whether you're considering yourself a CFO, an advisor, accountant, whatever role you're considering yourself as, that's going to be the contingency as to the successful implementation of all of this in the business of our clients.
Well said, Roger. And I think that's a great way to leave this episode. If our listeners want to get in touch with you, find out what you're up to, where should they go?
universalaccounting.com. Great bit of information there, free resources that everyone can take advantage of. Also, the podcast is mentioned as well.
Oh, yeah. What's the name of it?
Building the Premier Accounting Firm.
Find that wherever you listen to fine podcasts. And David.
And not only does Roger have the great voice for podcasting, like his photograph of himself that's on his podcast artwork is very well done. Like it's very attractive on the cover of his artwork. So,
thank you, David. I appreciate that.
Very important. Very
photo.
important.
It comes out very authoritative too. It's a very important.
David, where can our listeners follow you?
I'm just on all the socials at David Leary. Easy to find.
And I am at Blake T. Oliver. Thanks, everyone, for listening. Don't forget, you can earn free CPE for listening to this episode with the Earmark app. Learn more at earmarkcpe.com. We'll see you around, and hopefully join us live next week. Subscribe to our YouTube. We are the Accounting Podcast on YouTube. See you, bye, everyone.
Take care. Bye-bye.